Hello, this is the Chartprofit video. We're about 2.5 hours into the trading session on Friday the 11th of December. This on the pre-open today, just reviewing the E-mini S&P over the last few days. Late last week we approached but did not exceed the major point of control at 2094. Earlier in the week there'd been a probe above it over here, but then we started printing value areas below that level, which is an acceptance of price below the major point of control, which is usually a sign of weakness. We had some aggressive selling over here last week, which unusually was followed immediately by a day with aggressive buying. I said that when we're close to or in the vicinity of levels of importance like these major points of control, often the short-term implications of these buying and selling imbalances is not as reliable, and the market is moving away from them. So where we are now this week has been in the hands of the intraday sellers. If we look back to Monday, for instance, we saw selling activity here, and we had not a totally convincing but an overlapping lower value area here. On Tuesday intraday it was all buying, these numbers here, plus numbers, and yet the value area was lower. That's ineffective buying. That was followed by a day of composite selling. We had a lower value area, that's effective selling. On that day we had reactive selling at the top, aggressive selling at the bottom. These red at bottom lows, as I keep saying, are usually tested 80% of the time within a day or two. We've seen that tested today. And that day was followed on Thursday again by an ineffective buying day where we had an inside value area here. So this is all signs of weakness. I mentioned all of this pre-open today, but also said here that if the distribution which began in early October, and I'm referring to this highlighted comment at the top here, if that distribution is still valid, then I'll be interested to see how buyers react if the value area low of that distribution at 2025 is tested. So I highlighted the previous comment up here from 1st of October. Let's just look at that. This was a comment on the 1st of October, market pre-open. Overnight enough time was spent at 1923 to migrate the 55-day point of control to that level. This is significant. Having watched these distributions for a long time, I know the point of control emerging at 1923 makes sense and suggests the distribution that began with the August sell-off may be near completion. The E-mini may be ready to make a new distribution or to begin a new distribution, and price relative to 1923 is very important to monitor. Significant buying marked above that point of control, which would have been here. Significant buying marked above that point of control would be a positive and suggest higher, and selling marked below would indicate more weakness. So at this point we were ready for a new distribution. Actually, the E-mini immediately began its new distribution. We never saw that level the following day. And this is basically the new distribution here. Just quickly refer to that. Here's 30-minute price distribution from October. The point of control is at 2087, we know. The value area low of that distribution is 2025. So if this distribution is still valid, you would expect price to, a probe below that level, to attract buying. We'll look at the price action so far today. First level resistance 2054.50, that's a half range off the November high. We opened actually quite a way below that over here. Having overnight, you can see that level 2054.50, that half range resistance. And we've been probing below that value area low I just mentioned at 2025, and it's going to be interesting to see where we are relative to that level by the close. As I said, on the large time frame you'd expect buying to come in below this value area low if that distribution is still current and valid. Having said that, wouldn't be interested in the long side until we see price minimum back above that half range up here. E-mini behaving in a very bearish fashion and currently in a weak price location. Really not being helped at the moment by oil. This is crude futures, as we know, broke below the August low this week, and that's a 6-year low. You can see it's heading down here to the 2009 low, which comes in here. Just a quick look at the breadth chart. This is the daily breadth indicators through yesterday, through Thursday, getting a little oversold. here on the net volume percent 10-day moving average. That's below a -20. But these two indicators at the bottom here are not looking supportive at all, and that's why we have the red area here on the breadth part of the pulse chart. And as you can see, here's the point of control on the spider up here, just below there, and we've been attempting to overcome that resistance through much of November and this month, and the chart just hasn't been able to do that. And so what we're seeing here is consolidation below a major point of control, which is a weak pattern. So these two here, price location and the breadth, are not looking very healthy. At the bottom here, the price oscillator is just above zero, but it has actually turned down again. If that heads back below zero, we have a really weak looking chart. Let's just quickly run through some of the sentiment indicators. This is my version of the RIDEX assets ratio, which is currently around 8 or just above 8 and has been for a few days. There's been some weakness in the market prior to today, and the RIDEX ratio hasn't really come lower, which is usually in the short term not a good sign. So there's no fear being registered here at the moment. We hit I think a 70-day low early last week as the market was up here, and the ratio is holding flat at the moment. So we want to see some fear at least coming in here, especially with this week end to this week, if that's indeed what we get. Looking in isolation here at the bear fund assets that I follow, they're actually spiking up a little bit relative to where they were in early October. At this point, this doesn't amount to much fear, and the bull fund assets kind of flat. They're about where they were mid-November. This kind of movement might be constructive. I'd say the public poll from AAII is fairly neutral. We've just dipped down on the net here, just slightly into negative territory. The net, the bulls minus the bears, as I mentioned here, just gone negative at an 11-week low. Investors' intelligence also, I'd say, neutral. We had an increase in bulls percent this week, but the bears percent was also slightly higher. So again, not much fear registering relative to recent readings. Same with the exposure index, looking at the active money managers equity exposure. It's pretty flat this week relative to the last couple of weeks. 2 weeks ago we hit 70.45, that was the highest since June. Perhaps getting a little over enthusiastic at that point. So I think the RIDEX is probably our most useful guide in the short term. If we're going to see some kind of oversold low being put in, it would be useful to see the ratio heading south here pretty quickly. We see relative weakness in the small caps. Last week we talked about the probe here up into the value area high, which is immediately rejected, but now printing below the major point of control. So this is really weak price location for IWM. As far as bonds, we've been following the 7 to 10 year, just relative to its levels. It's been pretty useful. The major point of control is down here, which, as we know, was tested exactly early November. Had a good bounce from there, and now we were following that. We got rejected at the 18-month, and we were oscillating below. As I mentioned last week, if we see price, which we're now printing above this 18-month level at 106.60, this is kind of stronger price location and does indicate higher if we see consolidation above that level. Look at gold. Cash gold printed a new 5-year low last week, and that break of the recent low, as I'll show you in a second, is very weak price location. So when we broke below the July low on the cash gold, this really is a weak price location. So if you're a gold bull, you'd really want to see price minimum back here. This is not a good indication though. The longer we spend below July low, this level is really important. And here's the equivalent on GLD, same position. Dollar index, dollar generally has struggled since it probed above the March high over here. This was with the ECB announcement just over a week ago, and the dollar has come weaker from there. This is the Euro FX chart. You can see the equivalent rally in the Euro here. Still plenty of overhead resistance. First level just a little bit higher, which is the half range off the March low. and then there's plenty of overhead resistance here. I'm just interested to see where, if this price action in this kind of area here might migrate a point of control to a useful level. Currently this is still looking like a really weak chart. Following the 30-minute price distributions, we may see a shift, which would be interesting to me. I'll mention it if it happens, but it has not happened yet. It just depends on time around here actually. Pound, dollar, also just slightly higher. We've got the half range here. Price up here would be the first sign of strength. And you see again here with this Aussie dollar, nothing like a strong price location, and it's really me monitoring these minor points of control to see if we're getting any kind of bullish shift. But on all three charts, could happen, hasn't happened yet. Just want to finish with, there's a link I sent you today in your pre-open email with the updated OECD composite leading indicators charts, which are always interesting to me at least. Got the charts through November, data for the OECD through the end of October. The OECD call this level at 100 the trend line, and they're not intended to be shown with stock index charts. That's what I do here on these monthlies. And you can see here the US OECD leading indicator has dipped below 100 over the last few months and is still heading down, possibly impending recession over the next 6 months at some point. That's the indication. UK actually not looking so healthy either. Plenty of charts in here, so go and have a look. Just last look at the E-mini. We're down on a new low for the week and the day, 2014.75 currently. Looks like we're following oil. This is like crude futures, half hour. Looks like we're following that lower once again. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.